to our Behring Capital and Behring Regional Center year-end event. It was an eventful 2023, and we wanted to recap all of the things that we saw and talk about 2024 and the year going ahead. It's going to be pretty fast-paced today. End of the year, everybody's got a lot going on. So we want to deliver this just quick and fast and get to a Q&A session, and then we'll be planning a whole host of events here in early 2024 as the dust settles from all of this year-end activity that we saw here at Behring. So I'm here with my co-host, Peter Bibler, our managing director, and Greg Sheehan, our director of EB-5 platform and USCIS compliance. Aaron Hammond may be joining us shortly, but we do have a short deck and to try and talk about some of the things that took place here over 2023 and things about the industry. Things about 1900 Broadway, our new RISE fund that kicked off toward the latter part of the year, the EB-5 program in general, and some of the policy changes, regulations, laws, everything in the middle. Talk a little bit about Peter and his expertise with the visa bulletin, some processing news, continuing some of the themes that we've talked about earlier in the year, and then also for 2024 on the Behring platform, what we have cooking next and where you'll expect us to be going over the next 12 months. So ultimately, what a quick update on 1900 Broadway, project that a lot of you know really well. Some current investors here, some new investors that we've been talking to, and people just wanting to get to know us, and then other investors from other projects that really are just here for the information. All is well, all are welcome, either way. But 1900 Broadway, 2023 was monumental for us. We exceeded the 100% requirement of our job creation early in the year. Today, we're up over 2,800 jobs created. The tower is nearly complete. If you are to drive by it, it looks like it's ready for showtime. We will have our first phase here in early 2024. But from a USCIS perspective, we had a flurry of activity here toward the end of the year. Where we were able to get I-956F approvals, not only the 956 for the regional center, but 2 project approvals for BRC Partners 5 LP, our debt investment fund for 1900 Broadway, as well as BRC Legacy Partners, also known as our legacy fund. Both of them were approved here recently over the last 30 days. Then we're proud to announce over really like the last 3 days, Greg, I think we saw our I-526 investor petition approval, and that was less than 18 days after the 956F project approval, which goes and reinforces our theory on after having the 956Fs, you can expect a very, very quick I-526 approval and hopefully benefit from batch processing if you get pulled in with a whole bunch of other petitions in that same project. In that same vein, we have seen hundreds of investors of ours going for concurrent filing and going after the EAD and advanced parole. We were happy to see that the State Department had addressed those in a hurry, with many of the investors seeing 90 to 120-day processing. Individuals on H-1B, F-1s, J-1s, L-1s, all of the above, anybody located here in the United States was able to benefit tremendously from the new concurrent filing policies here at USCIS. So a big win for EB-5 for those investors and the people that have invested with us. So proud to see that taking place. 1900 Broadway is at its very end of its initial capital raise. There's really only 9 spots left in the project. It has been an adventure, but happy to see the book close on this one as we are moving toward our next phases. So the project, again, a little bit of job creation, new job creation left as we open the first phase in February and look to see the full completion of the tower probably by April. Looking into 2024, what should individuals look for from this project? People that have invested or people that are joining us here in the first quarter. The first phase, like I said, opening, complete construction completion by April, as well as us moving into operations, moving into management, rental, cash flow, and then filling the building as fast as possible with the expectation of trying to call this stabilized in 12 months. We will be filing the initial I-829 petitions in the summer of 2024. The initial investors that were in this project from a couple of years ago have gone full cycle. Some of our lucky individuals already have their conditional green cards. They will hit their 21-month minimum limit and that 3-month window before the 24-month adjudication, or I'm sorry, conditional residency period. So we'll see those filings come out in the summer of 2024. What's nice about that for everyone else is that they will have their template for their filing already complete, and nearly all of the real EB-5 legwork laid out in front of them as their I-829s approach past their conditional residency periods. So 1900 Broadway, happy to see this thing come to fruition and nearly coming to a close here soon. And we'll be sending regular updates as we have over the course of the year. RISE, our Residential Income and Strategic EB-5 Fund. This was a huge accomplishment for our team, as well as our, really the origination side. And thank you to Peter, Aaron, and Greg working on this, getting 14 new assets onboarded for our platform. The 14 assets, 5 projects are still under construction. 1 actually completed at the end of this year. We've already deployed $25 million of debt investment into these assets in less than 4 months after launching, with the loan closing, I believe in August, Peter, something like that. I believe August or September, one of those. That's the fastest we've ever gotten to 25 million deployed after initially signing a loan agreement. So 606 total jobs already created. That'd be, for all of you following along on the EB-5 side, that's, initially 60 investors that would have seen their initial job creation requirement already complete. The upcoming year, we expect to see 5 or 6 more of these assets under construction, and just only 2 left in pre-development during 2025. So we'll talk a little bit more about the importance of a multi-asset fund, a little bit more about diversification and the ability to hop into a moving train, one that is already creating jobs, one is already operating, already in cash flow, and having multiple smaller, faster, quick delivery assets that are like the RISE quality assets. This is really fit for the new era, and we'll talk about how that all fits in with new USCIS policy and everything else from Peter and Greg as we get going here. Really, for 2024, as I mentioned, we're expecting to see 6 more of these assets under construction, a total of 6 buildings fully complete, renting, and hopefully a handful of them fully stabilized at 90% occupancy or better, and expecting those I-526E approvals by summer, the 956F by summer, fall as well, like for some of the trailing individuals filing right now. And then, hopefully seeing a full portfolio of cash flowing assets into 2025 and beyond, where investors are never, ever going to take the 100% development risk that they see in certain deals in the past. You're signing up, it's a piece of land, there's nothing there, no operations, no cash flow, nothing to hang your hat on. This is where you're going to have a whole handful of renting apartments completed, cash flowing, and you're only investing in the risk that comes with one new project compared to a full portfolio of stabilized assets. We'll talk about that a little bit later on and how all that takes place. Like I said, 1 asset, 2242 Magnolia, is already complete renting. Last I saw, it was over 60% occupied, moving quickly as far as the renters. And then looking at our under construction assets, the former Z Hotel, renamed Art House at 233 Broadway. That one's coming into completion here in January or February, and followed closely by our assets at Yerba Buena, 1925 Brush, and so on. But again, real progress, real job creation, real rental cash flow, and pure performance that backs an investment that you're stepping into a second phase or third phase of, while watching the first and early phases perform. And that kind of performance and validation, market validation, financial validation, job creation, we've always had a good handle on having a very, very low risk proposition for whether jobs will be created or not. But financial performance is that next window that we're going to see. For key updates, I'm going to turn this over to Peter and Greg as far as things that have happened in the EB-5 world, policy, regulation, market occurrences. all of these things are items that we've seen a lot of movement on. But Peter, why don't you take us away, or Greg? I know you guys put together a wealth of information, so I'll hand it over to you guys here for the next phase.
Yeah, I can hit the first bullet point here. We learned that in fiscal year 2024, because of carryovers due essentially to COVID and unused visas, approximately 22, or I think actually 23,000 visas could be available for processing. And we should expect a large number of those could be unused in the calendar year and carry over into 2025, which should get a significant amount of carryovers, giving investors the opportunity to potentially get full cycle in that time. Fiscal year 2026 appears to be a normalized year where we're going to see less visas made available. But fiscal year 27 is important to think about because it's the last year of the current program authorization. And Congress is going to have the opportunity to increase set-asides to meet demand, where most projects are going through the reserved 32% limitations, and there's a financial incentive for IPO and Congress to do something about that supply constraint in order to maximize income. Looking forward to the future, we're speaking with industry professionals about how to communicate with Congress about the importance of maximized visa use for developers, investors, IPO employees. I was formerly one. We rely on fees. So we're set up to have a bright future. There's a little bit of uncertainty 4 years from now, but in the short term, with a lot of visas that could be used, there's a lot of excitement for EB-5.
Yeah, and one thing I would add to that too is for people who are planning their EB-5 visa applications, is that 2026 is the last year of the grandfathering protection. So that was one of the key things that was added into the Reform and Integrity Act at the end, where if an investor family files an EB-5 petition before October 1st, 2026, then they're protected from any potential termination or suspension of the program, to avoid things that had occurred in the years past. And for whatever reason, in the wisdom of Congress, they had the cutoff as end of fiscal year 2026 instead of the fiscal year 2027. So in the unlikely event that Congress does not extend in 2027, people who file before 2026 would be protected from that. And January 1st, 2027 calendar year would be the initial year that the or the automatic increases to the investment levels would begin. So these are just long-term considerations to keep in mind for families who are looking at EB-5 in the future. Visa Bulletin, January Visa Bulletin, a few months into fiscal year 2024, has shown a lot of progress, especially in the unreserved visa categories, where we've had backlogs, especially for China since 2015, and India more recently. So for China, it moved 3 months, which doesn't sound like a lot, and obviously we want much more, but that does have a significant impact for nearly 3,000 families based on the number of petitions that were filed at that time. And for India, it moved almost 2 years, which is significant. The dates for filing for India EB-5 still remain April 2022. And the dates for filing, which is chart B of that visa bulletin, is where the state thinks that the final action dates, the cutoff dates for will be at the end of the fiscal year. We'll see if that holds true. It really just depends on the speed of processing and how much they're utilizing these visas. But the good thing is, like Greg mentioned earlier, that they are processing these visas. We haven't seen wastage like in years past. And so I think that bodes well. A couple key other policy updates from the past year is the change in the EAD validity periods. This is a very huge convenience for people in the United States who are filing the adjustment of status concurrently with their EB-5 petitions. They're getting 5-year EADs now. So this would be enough time without the need for renewals while you're waiting for the actual green card to come and enjoy the benefits of an unrestricted work authorization to open your own business, take another job, take another promotion without the worry about the typical work restrictions on the H-1B, EB-2, EB-3 route. Advanced paroles, it wasn't expressly included in that executive order, but we are seeing advanced paroles, the travel document, the visa-free travel document that allows you to enter the United States without the need for visa stamps, being issued for 5-year periods now as well. The EADs are typically still coming in around 3 to 4 months time, and the advanced paroles typically around 5 to 6 months on average. So relatively quickly, as after you file your I-526 EB-5 petition, you get these benefits of the green card while you wait. Child age out protection. So this was earlier in the year that USCIS clarified that folks can rely on Chart B, the dates for filing, to lock in that the, so to speak, seeking to acquire visa benefits. And this significantly frees up a lot of time for people to lock that in, especially for China and India families in the unreserved backlog categories. But that's right now just for people who are in the United States adjusting status. I don't think that State Department has opined yet whether they're following the same procedure. And finally, I think most importantly, hot topic right now is recent guidance on the EB-5 sustainment period. And we'll probably talk about this in more detail later, but USCIS at the end of October published a Q&A on its website stating that it was updating its guidance on when does the 2-year sustainment period begin and end for your EB-5 investment. Historically, for pre-RIA investors, and this still holds true, is that the investment needed to be sustained from all the way until the end of your conditional residence period, meaning after you've had your conditional green card for 2 years. USCIS is on its new guides is suggesting that this 2-year sustainment period will begin from the time that all of your 800,000, all of your EB-5 funds are invested and made available to the project, subject to any time necessary to complete all the jobs for everybody. So they've clarified on a call that this is the floor, it's not the ceiling. It could be extended longer than 2 years from the time of investment because of job creation, because of the project needs, the realities of a responsible project development and repayment, or contract terms of the commercial terms of the investment. So we'll talk about that and the impact of that and what that looks like going forward. Finally, faster processing of EB-5 forms. This is the implementation of the RIA. We are seeing faster adjudications for rural and HUA, high unemployment area I-526 petitions. We are seeing that they're getting priority above the unreserved EB-5 investors. We have had some I-526 petitions approved for pre-RIA investors, but more recently we're seeing a shift. I don't know for how long, but at least a shift for approving post-RIA new EB-5 investors I-526 petitions. And we're seeing some steps taken by USCIS to make the adjudication process more efficient by assigning all the petitions associated with one project to the same adjudicator. At least for pre-RIA petitions, they haven't expressly stated this applies to post-RIA, but we'll see how this pans out. We have seen kind of batch approval, so it probably is taking the same route.
Yeah, I think it confirms the efficiency of the implementation, as you said, by decoupling project review with just source of funds review. It's a lot easier to move these files. And I know scanning is coming and digital implementation is on its way, and that will help in the future. But for an adjudicator to only have to take the source of funds package home instead of filling, boxes and boxes and going back and forth every week, it definitely adds to the end user experience. And it's good to see that. And yeah, if you're giving multiple assignments to one adjudicator from the same project, things get easier as well too. And it looks like we're starting to see that.
Yeah, I'd just add, what we saw in 2023 is a vast improvement in the EB-5 program overall, and all the things that were pain points and frustrations in the years before. I think that a lot of that was alleviated, and we started to see the benefits that came out of the implementation of the RIA. We're seeing faster approval times. So I think as investors are looking at the program today, there's a lot more predictability than what we had seen in some of the years past.
what do we want to move on to next here? I know there's some questions, talk about timelines and probably things with retrogression and conditional green cards, but we can continue with the 24 outlook first and then kind of head there.
Yeah, basically taking what we talked about, I started the prior slide with kind of a forward-looking visa allocation situation, and that basically continues into this slide where 23,000 visas is a gift for the program. And so we're excited to see how they're going to maximize visa use. And there's issues out there like dual approval codes that could significantly assist HUA demand if they're provided for rest of the world people or from India when that clears in the future. So there's a lot of optionality coming that we're seeing in the approval notices. IPO has yet to declare why they're doing it and what their end game is. So that's something to watch as we look into 2024. As Peter mentioned, continued visa chart movement is something that we're going to be looking at to see if the chart A for India catches up to chart B, and we're going to be watching to see where China moves. And the idea is what we're seeing is that there's a decrease in demand for unreserved visas, with a 32% supply constraint apparently in the reserved categories where most developments are. We're going to see these numbers start to flow down, and then Congress will have the opportunity to, I think, lift the limits to maximize demand. But we'll see. That's a little bit further down the road. Going back to 2023, we saw a successful mandamus action to get some data sent by IPO, which could be the new normal. Unless they decide to provide it themselves, they've kind of set the tone for the future that there is a way to get data. It's through the courts. And until they can efficiently provide the data to the service, I think we're going to see more of this going forward. Continuing to watch the faster set aside 526E approvals as we get more data from attorneys. We're going to be watching that. Everybody's curious about that, of course, going into next year. USCIS did start to outreach with stakeholders with the help of the DHS Ombudsman, and we're seeing trends continue to move in that direction to help with implementation and give IPO an opportunity to hear from the people actually using the product. 2-year sustainment period has an impact on potential development plans for better or for worse. Colin, when you see a 2-year sustainment period and you see the market rush to it as a developer, what are your thoughts?
Yeah, I mean, 2-year sustainment period, it perks people's ears because it's a lot different than what they've been told in years past. And it's a lot different than what the market had expected, but it's also really it's a conundrum for investors where you need to pick asset classes and pick investments that they're underwriting their expectations of performance, the realistic delivery of a project that creates jobs and what kind of timing that takes. So the investment side is going to require a certain amount of time. It depends on the size of the building. It depends on how difficult the construction is. It depends on a lot of different things. So the locations, whether they're urban, rural, they all present their own opportunities or challenges. 2 years for a sustainment period, I would say for any large scale construction project, and large scale being like even more than, really even single family homes will have a hard time delivering if they're not production homes faster than 18 months. And that includes horizontal development, sewer, water, streets, civil utilities, things like that. And then going vertical with the house, depending on how large it is, the fastest homes in production, maybe 9 to 12 months for vertical delivery. The other larger scale single family homes, could be upwards of 2 years or more. For multifamily apartment buildings, which would still be faster than hotels, motels, or any other hospitality, retail, a lot of those, you're talking about at least 24 to 30 month construction deliveries and full cycle, including all the horizontal or below grade items. You're looking at 3-year plus timelines just to build it, to actually have at least occupied everything else, tack on another 12 months for a good market. The reality of a lower risk, higher quality institutional grade project, real delivery is a minimum 36 to 48 months. And any sort of bump in the road, it's a 5-year deal. And that's why typically you've seen underwriting of 5 years. One, it matched the market in a typical I-526, 485, 829 filing with no hiccups or delays. It's a 4 to 5 year deal. And we saw a lot of those come out 2016, 17, 18 with our early projects, whether it was Copperstone, the landing at College Square, Madison Park Financial Corporation, or the Grad, all of those were 3 to 4 years to get to full maturation. So to hear a 2-year conditional residency period and that's your limit, investors shouldn't latch on to that 24-month mark. On the investment side, a good high quality asset that is backed by a strong group, they're not going to be signing up for a 24-month money. That money is available on the street at relatively low rates by hedge fund, debt funds, and stuff like that anyway. It's different. Then on the immigration side, anybody that's actually gone through this process would hear 2 years and laugh at you, because the reality is you might say it's 2 years sustainment, but it takes you time to file the I-526, do the due diligence. After you have the I-526 approved, then you're going through consular processing, you're going through the I-485 adjustment of status. You are going through these processes that are beyond your control. And the State Department and other government bureaus are getting involved. It's not just USCIS. So to get those things done, then be fully at risk, money deployed, then you're bringing in the reality of it saying you need to have 24 months of the full investment at risk into the JCE. So even if you handed your money to an escrow account, that doesn't start the clock. You need to be deployed. Then if they raise 100 investors in this 2-year deal and you're investor number 99, you're sitting behind 98 other investors. And that money is going to go out in monthly draws. And if you guys are funding the full construction of a 24-month deal, like your money might not actually be in the deal until month 22. So month 22 out of 24, you actually have started your clock and you can't even get out of this thing until 48 months. So the moving target is still there, and USCIS, they have made strides and accomplished a lot in 2023, but there are still dark spots in how this whole operation works. And there's gaps in the regulations, the policies, how this actually plays out. And a lot of this is actually taking place not in full view of the investor on when is the last dollar going into the deal. The last dollar and your investor dollar, when that actually hits the project, is a moving target. Just randomly throwing 2 years out there as the minimum probably only gives you 15% of the picture of like when is your dates going to hit. And each project's going to react differently to it. The capital stack would tell you a lot on how early or late your money is deployed. If you're the first position lender and you are the last money in because that's the safest spot in a capital stack, then you are the last money in. You are the last money to be spent. You are the last dollar to have your 2-month or your 2-year clock start. So there are devils in the details, and asking the right questions will reveal a lot about what 2 years really means. And I'm not sure, Greg, you were looking for an entire novel about the topic, but there you go.
Well,
I have thoughts about 2 years.
You know more about development than most regional center operators, so I think you're one of the people to ask. Thoughts on rural reckoning, the term that I'm seeing out there is people are fearful about potential issues like a rush from China into rural. They're being told it's the only way in.
Yeah.
How does that impact things?
We've been a regional center for a long time. We have a lot of contacts and agents, intermediaries, brokers in all of these markets. The most advanced, or call it mature markets you see is in East Asia. You've got China, you've got Taiwan, Vietnam, the countries that have been hard at this for a long time. Not a lot of English as native language. It's a little bit different than the Indian market, where they're doing a lot of investment and a lot of research themselves, whether it's domestic or international or the like. So these mature agent networks are going to grasp onto great projects that are easy to sell. And right now it looks like rural has a 100% advantage over HUA. It's 20% of visas, HUA is 10, it's double. That sounds great. It's easy to sell. And then they pair that with a visa bulletin that's current. And all of a sudden it looks like a golden arrow and a Patriot missile to just solve all your immigration issues. And again, it's similar to the 2-year conditional residency period. You don't have all the information. You don't have all the data. And rural, the hard thing to adjudicate there, like no pun intended, but the hard part to deal with is not having the data and the information and not knowing whether you are part of that initial reserve category, whether you are going to fall into the carryover group that's going to benefit from visas being carried over, as you mentioned earlier, or if you're part of a retrogression group. And if you're part of a retrogression group, is it 1 year? Is it, a couple months because you hit the September 30th deadline and a rollover of the federal fiscal year? Is it 2 years, 3 years, or is it China 2015 where it's maybe 9 years? So you won't know because you don't have that data. But the real rural reckoning from our perspective is looking at the market and the ability to build these projects, deliver them, and have the market pay back and return the investment plus whatever returns you were signing up for, where the environment financially for real estate development, hospitality, and just really our economy in general over the next 12 to 24 months is going to be a world of difference than 2020, 21, and 22. You had COVID, you had work from home, you had people moving across the country thinking they could keep their Silicon Valley salary and live in Des Moines, Iowa. You had people that were taking advantage of the opportunity that was there yesterday, hoping that that was going to last forever. Trajectories and growth, rent rates and or home, key rates, hotel room rates, RevPAR, all those things were accelerated for rural environments during that session. Now you've got 8 straight interest rate increases. You have a hope of interest rate decreases next year. The decreases are because economic activity is going to fall flat and it is going to nosedive. It already has. Construction starts have plummeted. And for these rural projects to survive a massive downturn, and if they're really relying on mostly hospitality is what we see. You see, rural, very tourist friendly locations, high-end hotels. You are playing with something that is very cyclically sensitive. Like it's cyclical in nature. When people are spending money, they're great. They're traveling, plane flights, private jets, whatever it is, they can get to the place. And ultimately, when the economy pulls back, where people get tired of that remote location because they're competing with everything else in the world for attention, are they really going to prevail in a tough environment? So the reason why rural doesn't really grab a lot of institutional investment is because they won't take the risk. And if they aren't going to take the risk and they won't put their money into the deals, what should that be telling you? And ultimately, that's going to lead us to a very large due diligence series that we're launching in 2024, talking about the ins and outs of real estate development, financial analysis, and underwriting these deals and trying to understand what your real risk and opportunities are. So that's going to be a full video series for first quarter of 2024. And we'll talk about the nooks and crannies of how real estate and really the financial underwriting works for these deals. So something we'll talk about later. But the rural reckoning, the pendulum swung really hard in favor of rural. They were given policy to think that it might be faster in processing, maybe. On top of that, you get the COVID wind in the sails for rural locations and travel, remote work, all those kind of things. Urban exodus was kind of one of the terms people love to throw around. Now the pendulum is coming back. San Francisco Bay Area is growing in population. Rents are increasing. Construction has been way down in urban cores. The pendulum's coming back to urban, and the return to work, stock markets, all these companies, the layoffs of 2022, 23 as well, really giving a reality check of how the future of work might play out. The pendulum for rural may have already hit its precipice and is on its way back. So, when we talk to our agent network, going back to the original theme for EB-5, why are you selling rural? And they say, well, there's priority. And it was like, well, priority only works in certain cases and it loses it. And if there's retrogression, which means 57 investors for any single category, then they're like, okay, well, rural, it might not be priority, but it's easier to sell. And if somebody is only selling a project because it's easy to sell to the person willing to buy, that's not a real reason to get behind a deal just because it's easy to sell. Doesn't mean it's good. So that's something that we're working through with a lot of our investors and people we talk to, is the reality check of what they're really comparing. And we have always stood behind our multifamily portfolios, rental apartments, workforce housing, student housing, intrinsic demand that is strong, stable, and unyielding. That's where we want to be long term. We are in the job of creating generational wealth. We are not throwing a dart at a moving pendulum. So that is that. We can probably move on to the next slide if you want.
Colin, the only other thing I'd add to that is we're also focused on assets that, you hear this thrown around, institutional players would invest in. And when you're talking about tier one markets, class A, urban infill locations, these are the assets that us at Behring are focused on. These are the types of groups that large REITs and other big players in real estate are only going to invest in. And so this is a big part of the quality test that we do on the investments we choose, thinking about not what does the market look like also just today and the little pendulum swings, but what's happening in the next 2 to 3 years, the next 4 or 5 years. How do you invest into something that's going to create, as you said, Colin, generational wealth?
Yeah, and that also brings out, it's not that there's high quality deals or no quality deals. It's just there's things that make a project or an investment easier versus harder. And a lot of the rural deals, you're going to see a very shallow buyer pool. So people willing to buy your investment and buy you out and repay you is going to be a much shorter list of names compared to a multifamily class A asset, brand new build in an urban core in the San Francisco Bay Area. San Francisco Bay Area, Silicon Valley, its economy is just right in the crosshairs of thousands of institutions that are responsible for investor money. And they even have a mandate to place money in these regions and to get their portfolio where they have a concentration of assets that are spent in these areas. That is not the case for something in Pocatello, Idaho. They do not have a mandate to spend money there. They don't have a mandate to go to some of the other Midwestern locales that I won't mention by name if they're competitors. And you are not going to see a list of 100 people that broker could have gone to and got bids out of 20 to 30 of them to get a competitive exit. The exit for a rural project is going to take something very focused on that small niche. And when the buyer pool is shallow in a time of need, if the market's down, the sharks are going to start circling and there's going to be blood in the water. And that's not a good case for a seller. And that's what you're going to be when you want your EB-5 investment back. So, there's a lot to think about. And our most astute investors, they don't ask us, at first just about the job creation. They don't just ask us about how to get a green card, but they are looking forward to market viability and exit. And how do those take place? So the rural category makes that even harder. So that's that.
Yeah, the last thing I'd say just on 2024, Greg, is we'd like to see some of these things that USCIS has been talking about in the public engagement meetings and on their website actually put into the policy manual and formalized as well, such as this idea about 2-year sustainment periods and what this means, and actually get ideally some of this stuff formalized in the medium that was the historical context for the basis for the industry's understanding.
Agreed. The market speaking, developers, attorneys, investors, everybody is pushing them. I have my thoughts on how things will play out, but yeah, we're looking forward to 2024 for sure to get some more information.
Yeah, and to see that policy manual, be able to comb through it, that has been kind of the precipice and the lead way that we've come up with some of the more helpful tools in our toolbox. Looking at the exact language for things on partial capital contributions, unsecured lending as a source of funds, the fine print in those regulations and policy manuals is just hugely helpful for those willing to read it and to actually design product and abilities for investors to take advantage and have a better prospect of filing. So we welcome those manuals and that policy when it comes out, so we can just start combing through it to see what's new. what other opportunities is 2024 going to have? It would be best to get that as soon as possible, because a policy that was passed in 2022 and has a 5-year life, we're almost running halfway through this thing without a policy manual. So that's not always a good position to be in. But to USCIS's credit, they don't have perfect vision into exactly every piece of how the program is going to run, but they're still pushing out approvals. 956s are going through, I-526s are going through. People are on their way to getting green cards. We're glad that we're seeing the approvals that we are, because that at least gives you hope that, the machine's running. It might not be running like a Ferrari yet, but, it is running and the wheels are turning. So ultimately, now looking at, the Behring platform as a whole for 2023, there was just a lot of progress. I couldn't be more proud of our team and the guys and the hard work and everything that has taken place. But some of the big milestones for what we've had, we added 14 new assets in a single year. And these are all multifamily, student housing, workforce housing, and market rate multifamily, about $720 million of development value. And, 14 assets, $720 million, they're smaller deals. They're smaller, they're faster, they're easier to build, mostly type 3 or type 5 construction, which is more wood frame or aluminum frame, low rise stuff. It is easier to deliver and doesn't take as much sophistication, which means a lot of contractor participation, lower cost bidding. It is a lower risk category for the multifamily residential space, and a lot easier to deliver than like a type 1 tower such as 1900 Broadway. Even though you get the best locations and the highest quality projects as type 1 towers, but ultimately for EB-5 and the new regulations, the shorter investment periods, and the focus on lower risk investment, we believe the next phase of EB-5 will be better suited for these smaller, quicker deals. Looking at some of the trends that we've seen, some are more heavily enforced that we've already seen in the past, and some are new. Talking about partial investment strategies. We talk about it over and over again, but when we first started doing partial investments, everyone thought we were crazy. Attorneys were threatening to sue us because we were misleading investors, and that you're not allowed to invest in stages. It has to be $800K up front. Agents were upset because they weren't going to get their commissions unless somebody invests $800K. Like, there was a lot of people that thought $800,000 invested in stages was a bad idea. Now, the bulk majority of our investors are probably all looking at partial funding strategies. Why? Because it's better tax planning. It's safer financial planning. You're not a motivated seller of assets like homes, stocks, or anything else. You are able to financially plan around your specific positions. And we have seen a massive uptick in the amount of investors taking advantage of it, still with 100% approval history. We have never had an investor denied, and especially not one denied because of partials. So definitely good to see. Love to see USCIS still churning out the approvals. And on the I-526E form, we see it explicitly laid out how that works. One question that we had from individuals on the chat was talking about, can I invest something minimal up front, follow up in a year with another 200,000 or 300,000, and then a year after that deliver another 400,000 or whatever it takes. Overall, 3 to 4 year funding plan. That would be good for me. If that was the case, it's not going to work for EB-5, really, because USCIS has reinforced and stated very clearly that the 800,000 must be invested at risk, irrevocable, transferred to the project prior to the I-526E being approved. Greg, step in here if I'm speaking out of turn. But to get your I-526E approved, you have to be fully invested and done with 800,000. The chances of you having the 800,000 in by the time I-526 is actually picked up and done by adjudication, if you were hoping for a fast adjudication, that means you need to have the money in quicker. And if you were expecting it to take 4 years to pick up your petition, in the RIA policy era, that's probably not going to happen. We're expecting these approvals to roll in 8 months, 10 months, 12 months. After 15 months, we're heavily taking a look and filing mandamuses for individuals that take longer than that. Mandamus has been very successful in 2023. We've seen a ton of investors use it to their advantage. I can't really see on my screen because I have a little presentation of the featured action thing there. But we did have a mandamus approved where we were able to get an 829 approved. Was it 15 months? How fast was our 829 for Madison Park? Greg, you remember?
No, I don't remember.
I think it's 15 months. Peter was on previously, but we had an I-829 approval for an individual in less than 15 months. The mandamus sped that along. Oh, Kyle just chimed in. 11 months I-829 approval. Okay. Peter, the ultimate source, says it's 7-month I-829 approval. Yeah, we have everybody bidding on our chat desk here.
Right.
It was fast, but it was a mandamus. The mandamus action is what got I-829 approval. And this individual, I don't have permission to use his name because I didn't think about talking about it, this thing, but he wanted to go after citizenship as fast as possible because of family planning. So very early on after filing the I-829, they filed mandamus and it was approved. 7 months is blazing fast compared to what a lot of the industry has experienced. And that individual was fully repaid, full cycle green card, I-829 approval, wrapped everything up, done. So that was a huge milestone for us and the team to watch that full cycle go through and have a very happy friend get what they paid for, to get what they signed up for, and not have to think about USCIS anymore going forward. So
yeah, just remember the 829 needs to be approved before the N400 can be approved. So now he's eligible for citizenship with no issues from EB-5.
There you go. So two of the other major milestones, Aaron, you spent a ton of time on the Unity Lender initiatives and the unsecured lending program, EB-5 investor loans. And maybe you want to talk about a little bit of the progress there that we've seen.
Yeah, we've seen a significant demand in our loan platform as the investment amount increased from 500,000 to 800,000 from people trying to fill gaps or provide bridges in lieu of selling other assets in the short term. It's been a very good program. We've really streamlined the operations in the last year. We've had over 80 applications that have come in the last year. We've funded over 25 loans. Typical loan sizes are going up anywhere from $100,000 to $300,000 for an investor. Our cycle time on getting through the process has been very streamlined and it's gotten faster and faster. It's been a very good program for the EB-5 investor to get to their 800K plan in a very quick and efficient way with their attorneys. But we also, as a group, provide the source of funds plan to the attorneys on the amounts that they're getting from us as well. So we also, not only are we helping to provide funding for investors to accomplish their immigration investment goals, but we're providing a very clean, best practice oriented package for the attorneys that gets filed along with the source of funds, and we stand behind it all through the process. We've implemented a Unity Lender program that mirrors the best practices and standards of any lender, whether you're in getting a loan from Wells Fargo or Chase, or you're getting a loan from us. We've implemented this best practice so that it mirrors what you should expect across in the financial services industry. And it's been really just a great program for investors, and we've had really good feedback. We have a complete loan portal and platform in place. So once your loan is in place, you can set up automatic payments. You can manage your entire loan through the portal, just as if you were working with another financial institution. And we'll continue to build out, and we expect this program to continue to grow into 2024.
Yeah, and I believe that Unity Lender, as well as just the prospect of unsecured lending and being able to add that as a tool in the toolbox, is a tremendous win for individuals that are looking to cover short-term gaps. You've got people that have RSUs, they have stock options. They don't want to miss a priority date. They don't want to miss retrogression, having a current Visa bulletin. They don't want to sell stocks in a bad tax year for them. They made too much money. They want to push it to the next year. There are so many reasons to want to file now, move quicker, borrow money to do it, and then be able to resolve all that financial items in the following year. to buy yourself time to sell assets like a home or other property that you get a better price. All of those things are really important to financially planning, and you can lose hundreds of thousands of dollars in taxes if you do this stuff wrong. The Alto IRA platform, and using 401k accounts or IRAs, self-directed IRAs, that ability, you've got retirement funds that you earned, is your money, fully acceptable to USCIS, and being able to use those accounts as a source for your EB-5 investment. It's just another tool in the toolbox that has helped people financially plan these things better. You don't have the tax hit of selling more stocks, having to disposition property or a home that was profitable. You're using money that's locked up for many, many years, and depending on your age, and not have access to it. And now it can actually fund your immigration strategies. That's a huge win. These took a lot of work. Unity Lender, from the moment that it was created, was probably about a month after the John case came out, and unsecured lending was completely given the okay, green light, ready to go. Unity Lender was created, the documents, the platform was created, but it took a number of years in order for that institutional quality platform to be running. And in 2023, over 25 loans were funded and a lot more in the hopper. Not everybody gets approved. It is like any sort of underwriting for a loan. It's income, credit quality based, cash flow, full financials required, things like that. So it's not just free money, but it is a lending source.
Yeah, and just at a high level, the typical process for getting a loan, it's no different than what you would expect, but you're going to apply for the loan. We're going to do based off of your initial application. We typically have enough information, especially if we're running a credit check, to know what your credit worthiness is, your ability to repay that loan. We can get to a pre-approval pretty quick. Then we're going to move into the stage that we're doing full underwriting of that loan, and you're providing documents to substantiate that loan. So if you've been through purchasing a house and taking a loan, there's a lot of similarities in what you would expect. If you've done your other unsecured loans, there's a very streamlined process here. And then after we've underwritten you and you've done all the other aspects of your EB-5 application, and we know exactly what your funding schedule is going to be, we're going to customize a funding disbursement schedule that's going to align with your investment plan for your EB-5 investment. So there's a lot of synergies that you're going to get with your EB-5 investment that if you go to another lender, they're not even going to know what EB-5 is. They're not going to be interested. They're not going to understand how it works with how this is working together. And so because we have that expertise, we have an industry best standard loan company in place, we can mirror these two worlds together and make sure that they work as a partnership in helping you get to your EB-5 investment journey and ultimately a green card.
Yep. So, we have, these polls that are coming out, guys. We really appreciate everybody trying to participate and provide some answers. We're also going to post some of these results publicly, talking about, the need for partial capital contributions, the need or where your priorities lie for how you make investment decisions. The more people that can contribute to the polls, the more valuable that information is to everybody. And we'll keep designing product and designing investment opportunities, or changing investment terms, or doing whatever it is to help people get what they really need out of the EB-5 investment. So we're still getting pretty good participation. About 47 to 55% of all of us here, 44 people on the call, are answering the polls. But the more you can participate, the much more helpful all of this is. And we appreciate those that took a moment to click in and answer there. All of it, very, very helpful. We right now are running a poll, talking about the shorter investment duration and higher returns or things like that. This is a major chat across EB-5 right now, talking about how important is it to go after a 3-year deal, 5-year deal. What is it that is going to make these investors happy with their EB-5 investment? How should we prioritize certain elements of the investment? Should we be talking about investment return, long durations versus short durations? These things move the needle significantly on the type of assets that are ideal for the sponsor, for the investors, for banks. You're trying to just weave together the needs of all of these different participants. And a lot of the information coming from our investor community really helps us have those conversations with the right participants to make these deals come together. We're obviously going to have our hands full here with the Rise Fund over the next 12 months and getting all of those assets delivered. But we always have our eyes on the future for next level deals and next generation EB-5 assets. And the participation really is appreciated from all of you. And we will make the poll results visible in, whether it's going to be a follow-up email or a video or a blast, or new polls that are being thrown through here throughout the rest of the presentation. But we'll try to keep moving through here since we're already about an hour in. As far as talking about 2024, again, we believe the Rise Fund and everything we're doing with these multi-asset portfolios that are diversified across a whole host of assets is going to be the best way to move forward with EB-5 in the RIA era. The biggest difference that a lot of people take for granted and that they don't really give a lot of credence to, because when you're shopping the general EB-5 market, they're all construction deals. It's construction jobs. The assets are a little bit different. You get hotels, you get multifamily residential, you get some offices, you get retail, you get, warehouses and distribution facilities. Sometimes you get energy related deals. They're a little bit different, but there are construction based, and you're starting with 100% development risk. There's no cash flow, no performance, no validation of the business plan. And you're seeing it all on paper. They've got reports that might suggest certain rates for if you do build it, you might earn X money. But if you have a multi-asset fund like the Legacy Fund and like the Rise portfolio, where after a year from now, at the end of 2024, 6 assets will be fully complete, renting and cash flowing, you are funding the 7th asset. You are not taking 100% development risk. You are taking 14% development risk, and then you have stabilized assets for 84% of the portfolio. After 2025, you are funding the 14th asset, and there's 13 finished buildings as your security. So you're talking about having 94% stabilized asset versus 6% development risk. Today, a lot of the investor world that's not invested with Behring is taking 100% development risk and has zero validation. That is lacking a lot of transparency. So having an evergreen and a growing portfolio, evergreen fund, meaning it's existing, there's assets already in it, there's value created, and you are adding yourself to it. That is something that the EB-5 world never had until the Legacy Fund and Rise. The Legacy Fund is invested across the Rise portfolio. There is a lot of opportunity to talk about this, and this is also going to be part of our video series for 2024, talking about terms that are really normal in the investment world: diversification, multi-asset, all of those kind of things. And then moving on to where EB-5 has never heard of these things, to never have the protection of diversification, to never have the ability to be spread across multiple assets and having that kind of security that comes with it. We're going to talk about all of it in 2024. The multiple investment options, if you know us at all, you already know there's 3 different major profiles, from debt, preferred equity, and common equity. That has grown significantly over 2023 and into 24. In 24, we're starting to see a significant number of our investors all want equity. They're talking about wanting to move to the equity side because they're seeing all the performance and they're seeing the cash flow. They're seeing all of that validation. They don't really want to settle for the lowest risk debt options. And that has been something different than the years past. 2018, 19, you saw 80, 85% of investors start talking about debt style investments. And then it's also different based on the countries. But 2022, 23, a significant level of investors all start looking at equity. So you're seeing some different trends play out. But if a lower risk, lower return debt style option gets you to 3-year exits, does that tilt the needle versus higher returns on a longer duration wealth generating asset that is ownership equity in an apartment building per se? It's going to be a 5-year, 6-year investment or more. If it's a multi-asset evergreen fund, you might never sell your units. You might be in there for the next 10, 15, 20 years because you're making money, but it's still long-term. So the EB-5 investment world, some people are like, just give me the green card. The returns are secondary and deliver it well. That world versus, EB-5 tilting more toward an institutional investment is something that we might see start tilting a little bit more in 2024. And that's part of our predictions for where we are next year at this time, talking about the year in review for 24. So that'll be interesting as we watch this play out. YouTube video series, Greg, Aaron, Peter, there's going to be a lot of work put into the YouTube channel in early 2024. It's time for some updates. As I mentioned, this team was working on 14 different projects here at the early stages of 24 and finally got everything underwritten, filed in Q3, Q4. We're going to go back to content creation and delivering news, delivering policy, how-tos, due diligence directives. There's going to be the big news for 2024 that will be all over the videos is when we get visa numbers from USCIS that give us very clear depictions of what retrogression, if any, backlogs, carryovers, or current categories. You're not going to have people flying blind. And that is going to be a major focus to deliver reality and what people should take away from these numbers and not get sucked into market speak or sales tactics alone. One of the things we've always prided ourselves on is the delivery of good information, honest, straightforward. It might not always be rosy good news, but it is the news and it is accurate to the best of our abilities. And if you find something where we might not be accurate, you got to tell us real fast because we're happy to correct it. So no shame there. Greg, anything to add on the video side or content to expect, other items that, we'd like to get out there?
I just want to say and share the feedback that I get from investors and potential investors who really find a lot of value going through these videos. When it's time to self-study, when it's time to take notes and sit down and drill down and have a resource that you can go to and really deep dive into multiple components of EB-5 for the first-time investor, for us to deliver that asset to the market. Tremendous feedback all the time. I'm proud of being part of it. And looking forward to some key updates. You never know sometimes when something comes up where you might have to make a video or write a blog or put something out to, try to maintain currency. USCIS doesn't always tell you when things are coming. So we're watching that for video content, regulations updates. I'm watching for annual reports from the State Department, from IPO. A lot of data is coming. We've got some footage that we recorded with Joey and Charlie that is in the editing room that's soon to come. So there's a lot to look forward to with EB-5 because it's always changing, and you need somebody that you can trust to tell you about where the uncertainties lie.
Right. So those reports, Greg, what are you expecting to see as contents generally in those reports? Because for all of us somewhat new to immigration, like the EB-5 investor typically is only looking at EB-5 because they know nothing about it. They might not know about what's going on behind the curtain with the other agencies, Department of State and everybody else back there. What kind of reports help us gauge what's going on? There
are a lot of different components to look at. And I would say the most obvious thing is how many people filed for EB-5 in the fiscal year. We'd like to know that, right? And then from the State Department level, how many visas were issued and per what country? So for instance, India has the potential to get a ton of visa allocations because of recent visa availability and carryovers. We want to see what that number looks like because people are pitching this idea that India is always limited. Maybe I'm pitching the idea that there's a bigger limit. I want to know so that I can speak to investors and we can all have, a very clear conversation about what is actually happening, because there's so much interest from the Indian community specifically who pays attention to visa charts and visa bulletins they're better at stats than me. And so to be able to talk to them and say, here, what do you see? Here's what I see. Let's discuss. That's going to be an important asset to review. And we expect that actually. I thought it would be coming in November, and now it's December. We don't have it. It's an annual report. The government gets the things when they want to, but the fiscal year is over. The calendar year is coming to an end. So hopefully we see both of those in January for more opportunities for discussion.
Yep. Looking at just some of the questions here. There's some individuals here that are inquiring for more information, clarity on these unused visa caps. You had the chat with Charlie Oppenheim, who has had a few chats with people in the industry. Then Joey, his partners there at Wolfsdorf, and what items do we know, and what items are we looking for out of USCIS? I know you commented a little bit on it just now, but how do we give clarity to somebody on what do I need to tell them what the numbers are?
Right. And so it's important to sit back and realize that there's different people with different points of view asking similar questions, and the responses can seem convoluted for one, but completely understandable for another. There's reserved categories, there's unreserved categories, there's rollovers, there's otherwise unused visas that can be allocated within a category. So I would say, check out my blog, go to our page and look at my blog post that kind of does a little bit of a dive here. But information that we want to get from the Immigrant Investor Program Office is why they're using dual approval codes that allow you to take a visa from the unreserved or reserved category if it fits your need. This also potentially opens up the opportunity for a rest of world investor who is pursuing a reserved category to be given the visa from unreserved demand, which would be huge for HUA, because people who are not motivated by rural choose HUA projects historically for economic reasons. So if that band of otherwise unreserved visas can instead go to the unreserved category and be allocated to India and China, you've got a big opportunity there. So the industry is asking IPO what they're doing, what's the purpose behind it. Some insiders that I've talked to, some former people, we all agree it's a great way to maximize visa use and to create extend the financial viability of the program, which is in the best interest of everybody involved. So yeah, as we get more information, that's something we're going to want to report on.
Yeah, no, absolutely. And we'll be excited to see those numbers. We are always a little bit tempted to dive into the FOIA world and mandamus for those numbers, because it seems like those reports come few and far between and too slow for our liking. Some individuals and groups were able to claw out a little bit of data, but it's still dated. I think the most recent numbers we were able to see were potentially around April or May of earlier this year, but really prior to the big rush that we experienced, where the numbers are going to be vastly different. And then if that's the only data that's out there, and that's the only thing that people have to kind of look and evaluate their options and opportunity, then are they kind of basing their decision on false assumptions? And data can also be bad data, and you can come to a false conclusion on what your risk was or isn't, or what your priorities should have been at the time if you had known what the real numbers are. And you are flying a little bit blind talking to USCIS about visa numbers when it's 9 months or 12 months delayed, and you're expecting those numbers to be vastly different. So that's why we've always stressed on picking a very high quality investment that you're happy with, whether it's a year deal, 5-year deal, 10-year deal. Pick something that you believe will stand the test of time, because if you're forced into a situation where you do need to stand the test of time, then that you have a high quality deal behind you to do so. If you were really trying to pin the tail on the donkey and get in and out of something in 12 to 24 months, it's just not happening. So EB-5 has never been that game. It's not going to be in the near future. The fastest cycles for EB-5 that you're going to see, my guess is at the absolute fastest, is probably 36 months to 40 months is the fastest deals that you're ever going to see, if the product is perfect, the timing is perfect, the need for your funds and deployment of your funds is perfect, and USCIS somehow magically stumbles and falls and picks up your position. So it's going to be something that plays out here in the future, and there's a lot of people that are still questioning the reality of, is it really going to be a 2-year deal? Because the difference of talking about law, statute that was written in the RIA versus policy, regulations that get passed, and then a USCIS announcement, which they would hope would be official. But when it comes to a federal judge, they're going to look at statute and then regulation. So the ranking and priority of how much respect you can put to each bucket, and then, where did you see 24 months written? And is it 24 months during the conditional residency period or 24 months from investment? What's the ranking of that? There are some serious doubts by certain people out there, including very experienced immigration attorneys, that are questioning whether it's really going to be a 2-year deal. So lots of information needed from USCIS to give clarity, to clear the air, and to allow investors to make the best possible decision for them. In 2024 will hopefully give us those answers, and then we will place them in videos on YouTube. Outside of that, talking about investor relations, Aaron, this has been your domain of helping us build this machine. And what are the year-end items that we need people to focus on? This is for our investors already invested with us, or future investors, if you do invest with us, the kind of items you would expect to see from any regional center on a close, year-end and year-end closing basis. But Aaron, what should investors be thinking this time of year?
Yeah, great question. This time of year, we're typically focused on getting ready for tax return filings. So number one priority should be notifying us if you've had any change in address or residency status. So let's say you got your green card this year and you moved to the US. Like, we need to know dates that you moved, exact dates that you took residence in the US, because it's going to affect tax returns. So letting us know where you live, where your residency is, so that we can get that updated. And we're required to have a tax form on file for you, for every one of our investors. So if you are living outside the US, it's typically a W-8. If you're living inside the US and you have a tax identification number, it's typically a W-9. We need to provide these to our tax accountants. So if you do have an address change, we also will be requesting an updated tax form. We are really not supposed to be telling you how to fill these forms out. That's a form of tax advice. We have some general guidance that we can provide, but ultimately it's important that you fill this out and fill it out to the best you can. If you live in a country that's like, for example, Canada, there's a tax treaty between the US and Canada for some of our funds. That means withholding rates would be 0% on a federal level. You need to fill out the tax form correctly so that we can claim that 0% in our withholding. So just reach out to us if you have a change in address. If you have a change in bank account, we also need to know about it. All of this information on the bank account can typically be found in our investor portal. You can log in, you can check what bank information is on file, review that information, make sure it's updated, because that's the information we're going to use as we're looking to close out the year. We're looking at distributable free cash flow to investors, for preferred returns, for income. We use this bank information to make those distributions. So we want to make sure that that is up to date, because when we have delays, if people are forgetting, it ends up causing delays for everybody. So in some ways, it's a group effort in terms of trying to make sure everybody's updated so we can do these mass updates. So really, changes in where you live, changes in your bank information, changes in your immigration status if you moved. All these are really important so we can get all your tax forms and all your year-end financials.
And those are common themes. Common theme is that we are your regional center. We are your investment sponsor and manager. We are not your immigration attorney. So please don't assume that because you told your immigration attorney or you told USCIS what your address is, right, we don't have that information. Like we are not your attorney. We are not listed on the G28 form that you sent in with your I-526E package. We are not going to have that information right away. We might not even know that you entered the United States with your conditional green card until after you've told us. So we have certain investors that are like, yeah, I've been here for 18 months. Like, you didn't know. And it's like, well, you never said anything and you never gave updates, and your bank transfer bounced and we didn't know you changed your bank account. Like there are information, like be sure, like when in doubt, just talk to us directly and make sure this information is delivered so we can serve you better, get your preferred returns paid out, get distributions out, to get tax forms where they're supposed to go. And ultimately, at the time it comes for 829 wrapping up and repayment, like we have to know where you are. And sometimes we get surprised on the status of certain investors because they just thought, oh, well, didn't the attorneys tell you, or didn't USCIS tell you? And it's like, no, they don't. The regional center and the investment sponsor do not have your personal information on your case because we're not your attorney. And that's something that some people take for granted. We might work really closely with all of our attorney partners, but it doesn't give us access to that data automatically. That's a privacy item.
Yeah. And there's the only other thing I'd add is that there's certain things that we actually have to, even if nothing's changed, we're required, like if you're an investor from 2019 and you're still an investor with us, which is probably, it may be possible, or you're an investor from 2020, we have to have updated tax forms, even if nothing has changed, every 3 years. So we can't have like a really old tax form on file. That's a problem for us. If you do change your bank information, given all the fraud out there, our fund administrator, HC Global, is going to call you and they're going to verify verbally with you your routing number, your account number, the information on file, so that we can make sure this information is getting sent to the right spot. We're not getting a bunch of return data because, that you thumbed it in wrong, which happens. We're moving fast. You type in the number wrong. Some of these numbers are like 12 digits. We go through this verification process for fraud reasons, but also for quality and validity reasons. So if there are things changing, we may be having to do verbal confirmations with you. So don't be surprised if our fund administrator reaches out to you to verify bank information.
Okay. All good stuff. The information being key and being accurate is a big thing for us wrapping up all of our annual reports and tax returns and everything else. That also means definitely try to keep us in your safe senders list so you're actually receiving our email communications. We are not going to pick up a phone and call very often unless it's something vastly urgent. So email is going to be our top mode of communication. So make sure that we're all in the clear on inboxes there. But year-end resources, all the normal things that you've come to expect, the things that Aaron mentioned, annual reports, those K1 statements showing your partnership, any of the distributions, tax-related items. The investor portal is going to be the key source of all the information and where we put all this stuff available for download. And then construction updates will continue to keep coming. So lots of information and investor relations items, reporting, compliance, and just transparency, really. So a lot of those items all coming out here over the first quarter of 2024. So if there's Q&A, if there's anything that you wanted to know or had questions about 2023, 2024, the assets, what we're doing, or what people got for Christmas, feel free to ask. It's open Q&A sessions for the individuals that are still with us here. So other than that, the core presentation has come to an end, and we're happy to answer questions live if anyone has any. And if we don't get any questions, we'll wrap up and let everybody enjoy the last couple of days before their New Year's celebrations.
526 and 485 can be filed concurrently, which is an improvement of the Reform and Integrity Act, where prior to that, you had to wait for your 526 to be approved before you could file your 485 within the United States. In this example of an H4 visa holder, filing the 485 locks in the 17-and-a-half-year-old's age. You all are looking at EADs coming in about 100 days. The way I say that is to the people getting their EADs today filed about 100 days ago. And we have a reasonable amount of data that is coming in pretty quickly. And yeah, I think that answers your question. He'll be treated as a minor for as long as the adjudication would take. And I think at 17 and a half prior to 21, you're probably looking pretty good. But if there was some delay, then the age would be protected.
Yeah, and for the individuals like who aren't able to see the question, one of our viewers is asking, is the I-526 and the I-45, can they be filed at the same time to preserve child age out? You know, he has a son that's 17 and a half years old, getting close to the 21-year-old limit, wanting to preserve that stuff. Concurrent filing locks it in. You know, concurrent filing puts you in control. It puts you in the driver's seat. And that really allows you to really secure your immigration path going forward. It is something that is fantastic for the individuals that are filing from within the United States, and just purely unfair for the individuals that are outside of the United States and not able to enjoy this benefit, because it allows the investors that are domestic here so much more control over their future. And really to completely avoid the sharpest effects of retrogression in a backlog, if or when it was to occur way into the future, but prior to your I-526 approval while waiting outside. So ultimately, that is a great question, and concurrent filing can be a savior for a lot of these cases. And the fact that it made it into the RIA was probably the biggest win for the people in EB-5 compared to just adding a lot of restrictions, administrative burden, integrity measures, or whatever they want to call all the extra law. But concurrent filing was a huge win. That was a good one.
Another question: do we have clarity on unused country cap visas from low demand countries getting transferred to high demand countries? So in the typical, let's look historically. Before the set-asides, where everybody was basically put in the same bucket, if there was an unused visa that was unreserved from a country where there was low demand, it could be allocated usually to China first. And recently in our conversations with Charlie, he gave a little bit extra to India because he just figured that there would get used. And so he went above the amount there. When we spoke in our video, I think that's something to look at for visa stats from the State Department, is whether or not the new visa control officer continues to implement the same strategy to maximize visa use in a reasonable way. And so now what we're seeing at a smaller level is these 10% bans and 20% bans. And now you're adding in dual approval codes, and things just get pretty messy. So to answer your question, do we have clarity? No, we have a lot of opinions. I'd be happy to, if you want to pick up the phone and talk to me about my thoughts, that's one thing. But yeah, unused visas can go towards China and India.
Okay. Another item, I may have messed up the answering function for another question, but someone asked, about 1900 Broadway and its job creation, and talking about, like, is there job creation left if it's nearly complete, and how does that work? Is there still opportunity to invest in a project that's nearly complete? And the answer is yes. The job creation is actually more a function of your money being utilized for job creating activities at a time that capital is needed. And you're not just simply replacing or refinancing a fully capitalized project that's already done, and the money is just not even needed. When you've almost finished construction, there's still remaining construction payments. And if you're paying for construction services and the project still has a need for capital, as in it's still not cash flow positive, then clearly the money is going to be used for job creating purposes. There's also something in construction called retention payments. As you're building a building, if it's a $100 million construction project, you might hold back 10% of that construction money in order to ensure quality control, to make sure that all the contractors really did a good job. They did what they said they were going to do. And if there's any disputes at the end of the project, you've withheld 10% of this money and haven't paid it out, so you can cover any gaps and make sure that the job gets done right. Then release those retention payments later after the physical construction is done, but the financial portion or commitment is not actually finished. So ultimately, those retention payments can drag on 2 months, 3 months, or even 4 months after the physical construction is complete. So physical construction is done, and we say, the first phase is February, the second phase is April. The retention payments might last until something like July or August until everything is fully paid out. Then you have operations. Operations is going to give you a far lower number of job creation, but on a large scale project, it's easily going to cover investors, whether they're 10 full-time jobs, 20 jobs, 30 jobs for a couple investors, or even 100 jobs for 10 investors. Something like 1900 Broadway is a $350 million project. The operations is going to create hundreds of jobs covering dozens of investors over the life of that job creation. And if it's going to take 5 or 6 months to start filling the building, getting it occupied, and get to cash flow positive, the real job creating period would probably be, really cut off, in the middle of summer. But to be directly tied to funding direct job creation and construction, the easiest item is to be invested well before the last day. You don't really want to make it close. You want to make it easy for USCIS. You don't want them trying to split hairs on 2 invoices of when something was paid versus when it should have been due, and then trying to decide on individual dates on a calendar. We want it to be just superbly obvious. And for something like 1900 Broadway, when you only have 9 spots left, the chances of it being contributed and put into the project during a very obvious job creating window is pretty clear. So the clean answer is yes, there's opportunity and there's obvious job creation. And here, being vertically integrated and having direct insight into every dollar being spent and when, we have the best visibility of any operator in EB-5 to be able to tell you exactly if that window is closed or if you're 100% in the clear and absolutely going to qualify for job creating purposes. And we're best positioned to do that. So yes, EB-5 is available for 1900 Broadway, but it's going to be sold out before the job creation becomes your biggest problem. So
right.
That's just the clean answer is, selling out is a bigger risk to you than not participating in the upfront jobs. Do we see any other questions on there, guys? Aaron, links to the investor portal. So, individuals are asking, okay, so I remember the portal, but I haven't been there in forever. How do I get to it?
Yeah, the easiest way to get to the portal is to go to our website and click the big login button at the top right, and that's going to take you directly into our portal.
And there will be a video, guys, that goes out early in the year. We did one last year. We're going to send this in everybody's emails. Again, you got to make sure we're part of your safe senders list. If you've opted out of marketing emails, that's also not going to help you too. That's one way that we send a lot of information to existing and new investors. But in the top right corner of all of our websites, our investor login is prominently displayed on the website. So it's possible to at BehringEB5.com. It's in all of our emails. It's our email domain too. That's a quick way to get to the portal. Looking at anything else that we see on there. Talking about the Unity lender here and clean source of funds. That, Aaron, you touched on that earlier, but the very quick and simple answer to that is that Unity lender gives you a source of funds package for Unity lenders capital. Everything is in it. It is written by immigration attorneys, reviewed by this former USCIS adjudicator. It's a clean package that covers its source. You do not have to provide any source of funds for the Unity lender provided funding. You will need to provide source of funds for any dollars outside of Unity lender, and your immigration attorney should be reviewing and approving that entire portion of your package thereon. But Unity lender will come with its own source of funds, and it's valid as for USCIS. Ultimately, it is a very clean source package that has really the simplest source of funds you can ask for, and that we'll provide that to all approved applicants in the Unity lender program. $300K has typically been the maximum principal amount that any Unity lender approved loan has been. In an extreme case, could you get a higher principal? Yes, but it would be on a very slim case-by-case basis. 300K is the max. And sometimes there's relationship-based lending. Sometimes there's an outsized credit reason. You have a multi-million-dollar borrower that has resources and a tremendous credit profile available to substantiate borrowing more money. Those, normal banking considerations are part of that loan sizing, but for all intents and purposes, the average borrower should assume 300K is a hard limit. If we don't have any additional questions, we would be happy to take any last moment request, and or we are able to sign off and let everybody continue with the rest of their weeks. But Greg, any final closing thoughts here going into 2024 or 2023 review items? What would you like to say?
Yeah, just on a personal note, it's been a great year. It's my first year here. I've come a long way. I've learned a lot. I've applied my skills, applied my knowledge, and helped people get to where they want to be. And in that process, I got to speak to a lot of your former investors who have been paid out, and just kind of getting the feedback on how this investment process has changed their life shows me that the program I worked on for 5 years from within the USCIS offices has a face and a heart and a family. And to be part of that experience is truly rewarding. And the people that I've met this year along the way who have talked to us about potentially investing, who have closed out, who are excited for the future, I just want to say thank you to everybody. Thanks, team. Thanks, EB-5. It's been a great year.
Yeah, Greg, been an incredible addition to the team. We're thankful for everything you've been able to bring to the table and provide. Really has rounded out this program for us. So we do appreciate it. But before you go, there is an important question that just came in. So if you were concerned about somehow, some way, USCIS did reject an EB-5 petition and you were originally on H-1B, can you go back to your H-1B? Can you keep it? What are your options at what time?
Case-by-case situation for the law firm. I'm going to punt that one. The guys at I heard Nima Korpivar talking about this recently on a group chat, because it does come up a lot within the H-1B community, because you have to think about worst case scenarios while developing confidence as well. So you have to just at least check off your diligence components there, but it is going to be a case-by-case situation. If you were to maintain your H-1B status while pursuing EB-5, then there's no interruption of your visa, because the two can proceed agnostic of each other. You would have two different A numbers. You would have two files going on different tracks at the same time through USCIS. And essentially people say that that's the best way to approach it. So yeah, I'll leave it at that. It does not foreclose your H-1B automatically.
Yeah, so it does give you some optionality. It does give you some parallel tracks. But again, case-by-case basis, really got to make sure you hitch up to a very seasoned immigration attorney on this journey. You want good answers, and you do not want somebody that's moonlighting in the EB-5 space. This industry has some really strong attorney groups that handle a very large proportion of the entire market. They're easy to find, but we're happy to provide certain introductions to the groups that we've worked with. But good attorney guidance will make this just a lot easier for everyone going forward. So let's see. Last comment or follow-up question with that, Greg. If you have the conditional green card, your status has been adjusted. Does that kind of finalize your track at the 829 space? What does that tell you?
When you get a conditional green card, you're a permanent resident, with the conditions being the sustainment period of 2 years. And that's why that lines up with the timing of 21 months to be able to, after you get adjusted as a conditional permanent resident, after 21 months, you can demonstrate 2 years of sustainment, whether that's done during your conditional residence period or at the beginning funding the project is still TBD. But yeah, you would no longer be subject to any visa categories. You can travel. You've got all the EAD stuff. So yeah, after being adjusted, there's no visa issues. You are a permanent resident.
Yeah, and then I think the more important consideration is not, if you're denied and it didn't work and it's over, can you go back? I think it's more important to look at those earlier steps on how could you get denied? How could this fail? Are you at risk of failing? And what are those factors that actually would make you fail in order to lose the visa after you had the adjustment of status, conditional green card in hand, and then effectively get it taken away from you? The chances of that happening are slim to none. And that's because if you've had your I-526 approved, they approve the project, the business plan. And if you went into a deal like 1900 Broadway, where it's largely construction complete, it's already generated a lot of construction jobs, you're investing during that job creating period, you're not having to rely on any bridge financing or any replacement money that's there, like you are ready to go. You will not be denied for job creating reasons. You will not be denied for sustainment reasons, because your sponsor shouldn't be shoving your money back to you prior to a valid sustainment period being honored. Then the only outside case is that somehow USCIS wants to go take a new look at your source of funds. They want to take that file again and like, oh, well, you know, we had a little fraud issue or something that we want to dive in and look at your source of funds again. They want to look at your file. And then all of a sudden they don't like your file as much as they did the first time. This is a rare outside case that has never happened to any of our investors, but we're seeing it happen to other teams that kind of went out on a limb doing certain things they shouldn't have done with source of funds for certain countries. And we're hearing USCIS pick up those petitions and re-review them again. That is a higher risk than any project-related items. Your project's approved, your job creation's simple, the asset is simple, you're invested $800,000. The chances of being denied at those phases should be slim to none. That's probably the lesson to take away.
And the 829 issue with source of funds comes up a lot with certain agent groups overseas that we don't really touch, and we haven't. We go direct to market. We talk to our people. We know where they work. We know the attorneys and the job that they do. When you get involved with regional centers that are scaling too fast, that don't have any oversight, they don't have in-house compliance people to look at the source of funds, they're just getting signatures from overseas.
Yeah. And you know, a lot of it too is when you're adding complication of certain translated documents and or trying to navigate currency controls and restrictions on capital movements. Historically, China and Vietnam have been very difficult in those regards. You have to do those processes right and document them appropriately and be able to show a clear source of funds and clear path of funds for USCIS, and an experienced immigration attorney is going to know exactly what that looks like. They're not going to mess that up for you. So again, working with good quality partners, good quality counsel, immigration attorneys, a good project, you know, it's just EB-5 just really isn't that hard unless you're really trying to make it difficult for yourself. So looking into that, if we don't have any more questions, I will release everybody. But Aaron, do you have any final comments or anything you'd like to say for 23 and 24?
I don't want to elongate too much, except that 2023 was a great year. We saw the EB-5 industry get back on track. We saw predictability return after what was a tumultuous couple of years. The investments that we're making as a group, we believe really set us apart from what you're seeing across the industry in EB-5. And we're really excited about the Rise Fund and what we've launched this year and the success that we've seen early on in just the first 4 months of the Rise, and having $25 million already placed really goes to show that this is going to be a really incredible investment opportunity that's different than anything you're going to see out there in the market, where you have all these assets that are cycling through these 24-month construction periods. So by the time you're halfway through, half your portfolio is already performing.
Yeah.
And the other half is getting developed. You've never really seen anything like this in the EB-5 industry. You've seen this in REIT portfolios in the public markets and different outside of EB-5. But when you talk about what's available in EB-5, they're typically these single investments and all your risk is tied to the success of that one asset within the portfolio. This turns that model upside down and actually diversifies your risk across 10, 15 different assets that are sitting in this portfolio. And you already have assets that are essentially performing by the time you get into the investment. So we're super excited about 2024. We're really proud of the Rise in a fund and what this investment offers to the EB-5 community that they've never had the options for. And we're looking forward to launching new investments beyond that as well.
Yep. No, appreciate it. So, thank you everybody that was able to join us. We will be having more events like this, and actually with more substantive quantitative data for visa processing, estimated processing times, as well as any kind of retrogression if it ever shows up, which we don't expect for 2024, likely 25 and beyond if the carryovers don't wipe out any kind of lines anyway. However, we will be keeping our ear to the tracks on all of it. So please join us for future events and watch the videos and things as we put that stuff out for your benefit. So on behalf of everybody here at the Behring Regional Center and Behring Capital, thank you guys. Happy New Year. And we will be back soon. So thank you.
Take care. Happy New Year's.